So today I'll share with you 6 proven secrets of good practices to adopt in order to effectively use your credit card to improve your credit score. So what's a credit card? A credit card basically allows you to access pre-approved credit offered by the banks or creditors that issued it. This means that you will have money available to purchase things on credit, but you have to pay it back either in full at the end of the month or over time through minimum monthly payment. So how does it work? Well, when you apply for a credit card, like any other loan or any type of credit, your bank will check your credit record and affordability before approval. The higher your credit score, the more likely you are to pay your bills and the lower the interest rate will be on your new card. It's that simple. Follow the rules and put more money in your pocket. The benefit of using a credit card outweighs the cost. So the question is, why can't you reach a credit score of 850 points? Here are 6 proven secrets of good practices to adopt. Secret number 1, have an open-ended credit card with variable interest rate. Owning a credit card is good for your credit score. I can't stress that enough. The credit scoring system wants to know that you can handle different types of debt. So, having both revolving debt and installment debt where you make regular payment are vital. If you want to reach 850 points, this is the most popular scoring model used by lenders to check your risk. So, make sure you have a mixture of credits such as mortgages, revolving accounts like credit cards, and installment loans and manage them responsibly. This is what I call the art of wealth building. Secret number 2, don't close your credit card account. Yes, don't close your credit card account. Most people, after digging themselves out of credit card debt, usually close their accounts from the fear of being tempted to run up those balances again. But closing your credit score account could hurt your score big time. Why? Because it could cause your credit utilization ratio to rise since you have less available credit. Have you ever been told by a lender that you are too risky because you don't have enough credit line? Well, I have, and from my personal experience, I suggest you cut up your card or put it away in a safe box instead of closing your account if you don't trust yourself with your card. Secret number 3, don't run up your credit card balances. Keep your balances as low as possible unless you can pay off your balances in full. From month to month, remember, your debt to total limit ratio, which is the amount of debt you carry, accounts for 30% of your FICO score, and this is a big factor on your scoring model. Like I said, credit cards can be a double-edged sword. It's a powerful way to accelerate your financial growth, but at the same time, it can damage your score big time. Always think twice before you run up your credit card balances. Secret number 4, never use your credit card to fund irresponsible spending. Do not leave underavailable balance on your credit card. Make sure to pay the outstanding balance on your credit card every month. Look into credit offers from banks that include long interest-free credit period of up to 60 days. You can use the interest-free period for purchases and settle them in full every month without paying any interest. Basically, you'll use the bank's money to live reasonably well. Secret number 5, avoid using credit cards to pay off debt. Rather stop, reassess your financial situation and see what options are available. It may mean cutting back on some expenses, and it will be worth it when you reduce your debt. But never use your credit to pay off other debts because you might not be able to pay it back on time, let alone in full. And this will dent your credit score badly. Secret number 6, use your credit card interest rate to your advantage. From a credit perspective, credit card rates are relatively lower than the interest rate on your personal loan. According to the National Credit Regulator in South Africa, the maximum interest rate on credit card is 20.5%, while the maximum interest rate on personal loan is 27.5%. A whopping 7% difference. Of course, interest rates offered are dependent on individual risk profile. A credit card may come at a lower interest rate rather than a personal loan if you need to apply for credit. I have personally used my credit card to acquire a lot of assets. This is why using your credit card interest rate to your advantage is by far my favorite. One of the keys to a higher credit score is using your credit cards responsibly, consistently over a long period of time. Play the money game to win. I wish you happy investing and good luck. Until next time, bye-bye.